All right, so how's it going, guys? Chris here. Welcome to part one of this multi-part introduction to Orderflow series. This is in part one here, we're going to cover what is the DOM. And this video is more intended for beginners, people that randomly stumble upon my videos and they're just curious as to what the columns mean, what the numbers mean, or they just have a general curiosity as to what order flow is and how to apply it to their own trading. So again, this is going to be more beginner friendly. If you are a regular viewer of my channel, hopefully you guys can still learn something from this. But again, this is just more beginner oriented, and we'll potentially get more advanced as we progress through the series. So if you guys are new to the channel, please give us a subscribe and thumbs up for more order flow content. We really appreciate it, and hopefully you guys learned something. But again, this is part one. Part two, we're going to cover liquidity. Part three, we're going to cover volume profile, other order flow indicators, charts. And part four, we're going to get into how to apply all this into an actual real-time trading session. So these videos are all going to be free. I don't have any course. I don't really charge for anything. To be honest with you guys, all the information that I'm going to discuss with you guys in this video is already out there on YouTube. So, I'm just literally reiterating what other people have said on YouTube. And maybe you guys are just comfortable with the way I explain things, but this information is already out there. There's no reason to, make people pay for this information. All right, so let's get started. These videos are going to be slightly longer than the regular videos that I release, but I just want to cover this stuff more in depth, and I don't want to miss anything, and I just want to go through this stuff as slowly as possible and just explain things as clearly as possible as well. All right, so before I discuss what led me to pursue this method of trading, or what led me to pursue a deeper understanding of the markets and how they operate, I just want to pretty much just go over what the DOM is, what the columns are, and compare it. Do a quick comparison to Jigsaw Trader, which is what I'm displaying here. This is the Jigsaw depth of market along with the Jigsaw chart here, and this is my broker standard depth of market here. So sometimes in my videos you'll hear me call it the DOM, order book or price ladder. DOM is just short for depth of market, but there's several different types of DOMs out there that exist. I use Jigsaw as just what I started with and what I've become more comfortable using, but this isn't free. This is you got to pay for this, and if you guys are interested in finding out more, I do have links in the description. But you do get your money's worth out of this actual software. And essentially the way this works is that it's a plugin that connects to your broker. All right, so I use Trade8, but it works with other broker platforms out there. So I'm showing here the Jigsaw depth of market and then Trade8 depth of market. So, and I'm going to go more in depth behind why I prefer the Jigsaw, but the standard depth of market that you get with your broker platform is fairly basic. Most of them will just show you the price, the first 10 inside bids, first 10 inside offers. Some of them will show a volume profile like I'm showing here, and that's essentially it. All right, it's fairly simple. It doesn't, you can't really customize this to the way you want to customize it. You get what you get with the standard broker platform software that you get with your broker. So what differentiates the Jigsaw DOM from the standard basic DOM that you get with your broker platform is these two columns here. And I'm going to go over this more in depth, but these two columns between the blue and the red is showing you the inside prints or the volume that's hitting into the offers and the bids. And being able to see that information in real time as you're trading or as you're analyzing the market is extremely important. You can break down that information, assess what's happening, see what kind of volume is hitting into certain prices, and it's extremely beneficial to be able to see this information, like I said, in real time. So those are the main differences. I mean, you can customize this as well to your liking, the colors, the other information that you can see. If you guys are familiar with my videos, I've sort of minimized this or sort of simplified this DOM just for the sake of this video. But you can customize this to your liking. There's other order flow indicators as well that's included with the Jigsaw DOM or the Jigsaw package. But I'll cover that in part 3. But you know, these two columns is the main difference as to why I prefer to use the Jigsaw platform over the standard DOM that comes with Tradevate or your Thinkorswim or other platforms out there. So let's go over what these columns mean here. And I didn't mention this earlier, but this is the DOM for the Emini S&P futures. It's one of the several products out there that I like to trade. It's the main product that I like to trade. It's the most liquid, the most heavily traded, and I've been trading it for several years now, and I've just grown comfortable with the way it trades, the pace of it as well. And since this is the weekend, this isn't live action here, this is a replay. And if we bump it up to, let's say 100%, this is the the pace of the tape that you'll get while you're trading in real time. And it looks pretty fast. You know, it is pretty fast the way it is right now. But just bear with me. You know, this information will become easier to understand and to be able to break down with more screen time. But just bear with me. We're going to keep this at 5% just for the sake of this video. Let me lower this. So we're going to keep this at 5% speed for the sake of this video. And we're going to go through some examples. But I first want to go over what these columns mean here. So if we take a look at this column here, this is our volume profile. And it's similar to this column here on the Tradevate DOM. But the volume profile is going to show you the total amount of contracts that have traded at a particular price. So if we take a look at 33.75.50, only 60 traded at this price. But if we take a look at 33.79.25, the most heavily traded price during this session, we have over 9,000 that has traded at this price. All right, so I'm going to cover this more in depth in part 3, but this is our volume profile. You'll see this update throughout the day in real time. You'll see certain dips, and it's definitely one of the more important order flow tools that I use throughout the day. I can't trade without it, and that you definitely want to keep this on your dome. You don't want to hide this information. All right, over here we have our price column. So the current price here is 33.76.50. And it'll essentially show you the prices above and below. That's all it is. It's pretty simple, right? So in this column here, we have our bid column. So if you want to make a bet that the market is going to go higher, you place a trade on this blue column here. All right, you can either hit the market or join the bids below it, depending on what price you want to join. But if you want to make a trade and you have analyzed your DOM and you think the market is going to go higher, you want to join the market on this blue column here. All right, and then these two columns here, as I mentioned before, this is showing you the volume that's hitting into the bid and the offers in real time. All right, now if we take a look at this red column, this is opposite of the blue. If you want to make a bet that the market is going to go lower, you join the red column here. You could either hit the market and get in right away, or you could wait until you get filled at a price that you want to get filled at and join the offers. Pretty straightforward, just a quick summary of what these columns are. So what led to this pursuit for more answers and a deeper understanding for the markets and how they operate was this self-awareness I had. I was aware that the way that I was trading was very inconsistent, and there were certain gaps in my knowledge that I knew I had to fill in. I was trading options at the time, strictly off of technical analysis, and it wasn't very consistent. And I remember Googling what made the market go up or down. It was a simple question that I had that I just was so curious about, and I knew I had to figure out. And Googling that question, I remember I was at my office at my job at the time, and it was just this curiosity that I had. What made the market go up or down? What made the market go up a tick or go down a tick? And that question that I had has led me to this here, being able to understand the order flow, understanding what's happening in real time, being able to analyze the information and execute a trade on that information. So it's a simple question that you can even ask yourself. Do you guys know what makes the market go up a tick or down a tick? And the reason why I'm making this video is to answer that question, because I would have wanted someone when I was, at that stage a few years ago to be able to help me understand that question. So that's the whole point of this video. So we're going to go over what these actual numbers mean, and then essentially go over an example of how these numbers go up and down. So let's focus in on these four columns here. We have the blue bid column here. We have the two current trades columns here, and then we have the red offer column here. And for this example, let's say we want to bet that the market is going to go higher. All right, and let's imagine that at each price here, there is one individual trader. So there's one trader that wants to buy 37 contracts at 36.50. There's one trader that wants to buy 84 at 76.25. In reality, there's most likely multiple traders that make up the resting orders here on the bids and on the offers. But for the sake of this video, we're just going to say that there's one trader at each individual price. And let's try to simplify this a little bit more and create more of a real-world example. And let's just say we're in the market to buy gold coins. All right, so you're this guy here. You want to buy 37 gold coins at this price here, 33.7650. All right. Now you put in your limit order. You're perfectly fine with waiting to get filled at this price. And there's several other resting limit orders below you that want to get filled at a particular price. All right, so you have another trader here at 76.25 that wants to buy 84, and below him there's another trader here that wants to buy 163 coins at 76. All right. Now opposite of you, there's sellers. All right. Now we have a seller here that wants to sell 84 coins at 76.75. And there's another seller above him. They put in a limit order to sell 162 coins at 33.77, and so on and so on. So as we mentioned, you're this trader here at 76.50. You're waiting to get filled on 37 coins that you want to buy. And then opposite of you, there's another trader that wants to sell 84 coins at 76.75. Now, what's extremely important to understand is if you guys just wait here all day waiting to get filled, then the market will essentially be in a standstill. It will not move. There will be no transactions executed, and price will not change. All right, that's extremely important to understand. In order for price to move, one of you guys have to compromise. All right, either you're going to pay up and buy the gold coins at 76.75, or this seller here is going to have to compromise and sell it to you at a worse price at 76.50. All right. And I'm going to clear out the center columns here for this example, but we still have the seller here at 76.75. He's still waiting to get filled on his limit order of 84 coins that he wants to sell at this price. All right. However, he's getting tired of waiting. He's getting a little agitated. He's been here all day and he wants to go home. And he sees you come in and you're interested at buying 37 of his coins at the price right below him at 76.50. Now he sees you. He says, you know what? I've been waiting all day. I just want to go home early. Let me get rid of some of my inventory. And he sells you 37 gold coins. All right. He hits the market and he sells you 37 gold coins that you wanted. And in this column, you would see 37 print. All right. So this will show you the current market orders that hit into the bid or the offers. All right. So now he sells you those 37 coins that you wanted. And now you're happy. You go home and you might come back tomorrow and see where the price is at and potentially sell it at a higher price for a profit. So you're out of the picture now. You go home. And now the sellers are dealing with this guy at 76.25. All right. So previously where the price was 76.50 bid, 76.75 offer, the price is now 76.25 bid and 76.50 offer. All right. So that is essentially how price moves. All right, and you would use the same example if we were going to go up a tick. All right. I think it's very important to understand this, and if this still doesn't make any sense to you, if you guys can leave a comment below or reach out to me in my email that I have in my description, I will be more than happy to clear this up. But that's just a quick example of how the market would have gone down one tick. And this is just the fundamental auction process that happens in the market every day. And if we unpause this, again, this is running at 5%. But if we bump this up to 100% at real-time speed, I mean, this is happening thousands of times every second. All right, hundreds of orders are being executed. These are just the way that the market flows. All right, so we'll bump this down to 10%, and so that covers what causes the market to go up a tick or down a tick. Now, why is order flow useful, and how can you possibly use any of this information that I displayed in this video into your own trading? Now, I remember when I first started trading, and I'm sure we've all been there, but when I first started trading, I was scouring the internet for any information, any bit of information out there that would provide me an edge and allow me to extract money consistently out of the market. That's why we're all here. We all want to do this, eventually be able to do this full time for a living. That's why we watch these videos. That's why we listen to podcasts about trading, read books, any information that would allow us to, that would provide us an edge in the market. That's what we're in search for. Now, the point of this video wasn't to downplay any other trading method. If you have a successful trading method that you find consistent, keep it up. I hope you're just here just because you're curious as to what order flow is. But the reason I prefer order flow over any other trading method is because it allows you to spot intent. All right. Now, once you see one side of the market have the intent to push price around in their favor at will, that's extremely powerful. All right. And I'm going to show you guys a quick example. And I pulled this video from my recordings, and I realized I had uploaded this video sometime September of last year, and but that's okay. I mean, the whole point of this is just to show you guys which side of the market has the intent to, hold their ground and push price in their favor. All right, so here we have the Emini S&P. It's the same product that I just showed you before. This is just an older Jigsaw DOM from last year. Here we have a chart, a basic chart, and at this point I'm looking at the Emini, and it's pulling back to a previously tested area. And when I see the market do that, I'm looking for buyers to step up and defend this area, similar to how they did back then, at whatever time this took place. All right, so I'm looking for intent from buyers to not only hold this area, but to push price in their favor and move it up higher. All right, so I'm just going to play this. This is playing at 100% speed, and what we're going to see here is sellers. They're going to sell as much as they can into the bids here. They're going to overwhelm buyers with all these sell market orders. But buyers are going to hold firm. They're going to buy up all that selling, and they're not going to allow sellers to really push the market in their favor. So once I see that intent from buyers to hold firm and defend this level, that's when I decide to go long. And this is just more of a basic example. I'm not going too in-depth with this example. That's not the point of this video. I'm going to go over more advanced explanations behind trading, being able to trade these setups. So again, and I'm just going to rewind this really quick. But again, we're seeing as the market is going, we're seeing buyers, not really give up any ground here. you see their intent to hold. As sellers are hitting into them, they're buying more. And that's what I like to see as someone that is looking for a reversal and to potentially test these higher areas. So again, you want to put your stop just in case. And as a short-term scalper, I like to look for quick moves in the market. And the second I get some kind of move in my favor, I'm already looking to exit the market for a profit. So this is what I mean by being able to spot intent. Who wants to hold the market? Who wants to push the market in their favor? And again, being able to spot this information in the order flow is extremely powerful. This is information that you can't see in a chart. So this is why I prefer to better gain an understanding of order flow and try to master this style of trading every day. All right, so I hope you guys got something out of this. Hopefully you guys found this this part one helpful. This is the end of part one. Hopefully you guys will have we'll look forward to part 2, 3, and 4. But let me know in the comments, is this something that you guys found helpful, or should I have explained more or gone over more examples? Again, this is just more basic information. We will get more advanced as we progress into the series. So thank you guys for watching. Please subscribe, give us a thumbs up, and take care, you guys.